China stocks fell, dragged by real estate shares, while Hong Kong shares rose, led by tech stocks. Traders are eyeing U.S. inflation data due later in the session, which could shape the Federal Reserve's policy path and affect financial conditions. Markets will also be focusing on the European Central Bank, which is widely expected to keep rates unchanged at its policy meeting tomorrow, looking for any hints about the speed of future rate cuts. Meanwhile, ratings agency Fitch revised its outlook on China to negative, citing increasing risks to the country's public finance outlook. The outlook downgrade follows a similar move by Moody's in December and comes as Beijing ratchets up efforts to spur a feeble post-COVID recovery in the world's second largest economy with fiscal and monetary support. To give us perspective on the market dynamics, we are joined by Chantal Marks from F&B Wealth and Investment. Chantal, thank you so much for your time. Having considered the fact that we are expecting US CPI at 2:30 SA time, and then you also have this downgrade by Fitch on China, which it seems as though the market has shrugged off. What's driving markets now?
I think uncertainty is definitely playing a role, and that's why it looks so topsy-turvy. And that's also why it's so difficult to actually predict how the JSE opens every morning, because we have the US that is gaining one day and making losses the next day. And then you have all of this uncertainty around China, but seemingly being shrugged off, as you mentioned, and perhaps more weight being given to the positives out of China. And perhaps that is a function of where asset prices in China are at the moment. So definitely some optimism around the Chinese economy, despite some of the negative news, helping commodity prices, and that in turn is really helping the South African market as well.
What do you make of the moves we're seeing in commodities, and how does that fit into the Fed's inflation story?
Yes, so the move in commodities, I think, is a function of some positive manufacturing data that we saw out of China last week. I do also think that from a longer term perspective, we are in a situation where supply for a lot of key commodities is going to be under pressure, and demand is going to continue to pick up to fuel some of these bigger themes that we've been talking about over the last few years, namely AI and renewable energy. So commodity prices, I think, are finally building a little bit of a base, and we are starting to see some positive momentum. Obviously, that could have a negative impact on inflation, but I think the bigger issue for inflation from a US perspective will likely be its local economy staying quite strong and wage pressure growth.
Speaking of that US inflation figure, we're expecting it, as I mentioned, at 2:30. But at the same time, on Friday, we kick off earnings season. What's important here? Is it the CPI data or is it the earnings?
So I think it's a combination of both, probably the CPI data being more important and perhaps filtering through more directly into what the Fed decides at its next meeting, and probably what the Fed decides in a few meetings after that as well. But earnings season is certainly important to see whether or not some of these lofty valuations that we have in US stocks, particularly the tech space, is going to be able to sustain itself. Because if the earnings aren't coming through, then the valuations are probably a little bit too high, and then we can expect some pressure on those stock prices.
Speaking of some of the tech companies, I mean, as we kick off earnings season, some of the themes we saw the last quarter was concentrated growth. We had analysts increasing their expectations. Are you expecting some of those themes to flow through this particular quarter, or are you expecting something else?
So I think it's going to be a pretty interesting quarter, because we still have some price pressure coming through. So margins are going to be at the forefront of investors' minds again. And then, as I mentioned, these very lofty earnings expectations for some of the tech stocks, I think, are going to be very interesting to watch quite closely. I think when we look at what the US companies generally do is they overpromise and underdeliver. So I think that theme will probably play out out again. And then I think from a sectoral perspective, perhaps looking beyond the tech space, it's going to be quite interesting. One of the things that I'll be keeping an eye on this week and next week is the banks' results, because if interest rates are going to stay higher for longer, it could actually be quite supportive for the banks. And I think the commentary coming out of management of those big US banks is going to be key to watch.
On Monday, we had an announcement regarding the MultiChoice Canal Plus your possible tie-up. Canal Plus offering 125 Rand a piece. And it's quite interesting to see how the MultiChoice share price has increased from Friday's close of 112 to currently 119. What's there to like if this tie-up should happen?
So I think we would really like it if that combined entity actually lists separately in France with a secondary inward listing in Joburg. And the reason why we would like it is just because of an unparalleled footprint in African broadcasting. So from MultiChoice's perspective, we're mostly in Anglophone countries where there is not a lot of competition from, for example, the state broadcasters, and local content is such a huge thing, and MultiChoice really has a firm footing in terms of providing solid, decent local content and sport as well to those jurisdictions. Canal Plus complements that quite well because they play within the Francophone regions. So there's very little regional overlap, and what you will see ultimately is a kind of an African-focused or a major African-focused player that has a competitive advantage over some of the streaming services from the US in particular, because of that massive investment in local content, and in MultiChoice's case, perhaps ultimately in the combined entity's case, sport as well.
All right, Chantal, thank you so much for your time. That is Chantal Marks from F&B Wealth and Investment, giving us her perspective on the markets. And as I mentioned, earnings season kicking off on Friday with the US banks. Analysts are going to be watching whether we're going to be seeing concentrated growth. Are we going to be seeing analyst expectations of margins improving? And also some traders saying that we're not expecting some of the share prices from these different sectors to move in unison, particularly this earnings season. So we'll keep you abreast of all of those changes in the dynamics. However, we're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.